This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Intercontinental Exchange, ICE, saw a record number of trades of carbon allowances in 2021, up almost 30% on the previous year, it said on Tuesday. Regions such as Europe and parts of the United States, including California, have set up emission trading systems, ETS, putting a price on carbon dioxide emissions as part of their efforts to cut greenhouse gas emissions and meet climate targets. A total of 18.3 billion tons of carbon allowances traded in 2021 on the exchange, up from 14.3 billion in 2020, ICE said.
Oil rose to around $82 a barrel on Tuesday, supported by tight supply and hopes that rising coronavirus cases and the spread of the Omicron variant will not derail a global demand recovery. OPEC supply additions are running below their allowed increase under a pact with allies due to a lack of capacity in some countries. OPEC-O major economies have avoided a return to severe lockdowns, even as coronavirus cases soar. Brent crude gained $1.14, or 1.4%, to $82.01 a barrel at 11:34 GMT, after dropping 1% in the previous session. U.S. West Texas Intermediate, WTI, rose $1.16, or 1.5%, to $79.39, after falling 0.8% on Monday.
Moving on to the top news in the energy sector.
Germany faces a gigantic task to achieve the climate protection goals it has set itself, Climate Minister Robert Habeck said on Tuesday, unveiling a report that showed it would have to cut its energy use by up to a quarter in the next 8 years. The new coalition government, which includes Habeck's Green Party, is trying to reduce fossil fuel use in Europe's biggest economy without overburdening consumers, not least the households whose energy costs have been rising for months owing to record gas prices. In order to hit its target of cutting carbon dioxide, CO2, emissions to 65% of 1990 levels by the start of the next decade, Germany will have to reduce energy consumption by 20 to 25%, a report from Habeck's ministry said.
Saudi Aramco has notified at least 5 Asian buyers that it will supply full contractual volumes of crude oil in February, same as January, sources with knowledge of the matter said on Tuesday. The full supplies came after the state oil giant cut February official selling prices to Asia to their lowest in 3 months. The world's top oil exporter has been maintaining steady supplies to its key consuming regions since the Organization of the Petroleum Exporting Countries and their allies, a group known as OPEC+, eased supply cuts from August.
Next, we have the top news in metal.
Costs of aluminium for European consumers are scaling record highs due to soaring energy costs and production cuts, which have exacerbated deficits of the metal used in the power, construction and packaging industries. Consumers buying aluminium on the physical market usually pay the benchmark price on the London Metal Exchange, around $2,950 a ton on Tuesday, plus a physical market premium that typically covers transport costs and taxes. But shortages mean traders and producers with inventory are able to command a significantly larger premium, which in Europe has shot up nearly 30% to a record $428.75 a ton since the start of 2022.
Trading on the London Metal Exchange, LME, resumed on Tuesday morning after a power outage as the world's top marketplace for industrial metals struggles with declining volumes. Activity resumed at 0615 GMT following the outage at a third-party data center on Monday evening, the LME said. The exchange, owned by Hong Kong Exchanges and Clearing Limited 0388 HK, migrated all systems to its backup data center and trading was proceeding as normal, a spokesperson said. We will now look at the top news in the agricultural sector. China's Commerce Ministry said on Tuesday it will maintain anti-dumping and anti-subsidy tariffs on imports of distillers grains, DDGS, a byproduct of ethanol production used in animal feed, from the United States during a review. The ministry will conduct expiry review investigations on the anti-dumping and anti-subsidy measures imposed on DDGS imports from the United States from January 12, and it should end before January 12, 2023, the ministry said in statements. Corn prices in China are still high and corn processors are facing tight margins, said Darren Friedrichs, co-founder of agricultural research firm Setonia Consulting.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.